GDP for Q3. Let me put it up on the screen. This is, by the way, one of the reports. This is from RBC Economics. But here's the chart. GDP was up more than they thought. Originally, they were planning on it growing by more than 3%. Then they revised their forecast quite a bit under that, and it came in at 2.9%, I believe, correct?
Yeah, 2.9%. So, it's not, off the charts GDP, but I got to say that it's not an uncommon level of GDP for Canada.
It's very normal. It's very normal for us.
Yeah, it's a relatively healthy level of GDP growth. Again, we're looking at the trend and saying, okay, are we starting to see the trend, slow down? And the answer to that question is yes. And when we're looking at numbers, when we talk about consumer debt and then we look at retail sales, I think it's in this chart as well, that things are starting to quiet down a little bit. So to me, this goes back to, will the Bank of Canada note the trend, give these rates some time to take effect, and realize that there's a lag time to things happening? But I'm going to say this again, JG, and I'm pretty, I don't know, I just keep looking at the data. Number one, I don't see a big recession coming. I see a slowdown based on the data that I'm seeing. And I want to say this, the one thing that will not change, and that is the cost of food. And now with what's happening in China, and I know I'm going off on a little bit of a tangent, now with what's happening in China, riots, all the rest of it, you're going to see a broken supply chain at some level. Now, I know they're working around things, but at the end of the day, it's going to break some things down, and that's going to have a ripple effect as well. It'll be months down the road, but we have to pay attention to it today to understand what's happening in the future. So food prices are going to go down right now. As China slows down, oil will probably back off, and I think it already has backed off, but that will be short-lived, and you're going to see oil spike again and fuel prices up. So we're going to see that volatility in oil, which I've always said, but ultimately oil will come back up. We'll start to see increased costs in the future. This is not going to fix that inflation. It will fix some consumer goods for sure.
Now, let's dig into the details here a little bit, because if you look at this 2022 Q3, so consumer spending overall was down 1%. Goods are down 6.5%, which is in line with what we've been seeing, Patrick, which is we've been seeing inventories really growing. So we knew goods would come down. It's going to be very interesting what happens to Q4, given Christmas, given Black Friday, what happened to goods, what happens to goods then. I'm very curious about it. Services were up 3.8%, government spending up 5.3%. You can hold your comments on that, Patrick. I can just imagine what you want to say. Look at this though, residential investment, negative 15.4%, and last quarter was negative 31.5%. Now, these are percentages of annualized. So these are being compared to 2021 numbers, but this other chart here to the right, or this other line to the right, this other column, is comparing it to the Q4 2019 pre-shock. So interesting that residential investment is back to kind of 1.6% growth when compared to 2019, but down considerably from 2021. So that the point is where I'm going with this is some of these, the slowdown and the lag effect of some of these slowdowns the markets, they've been trying to slow down by raising interest rates. It has been happening. The question is what's going to happen as we, go towards the next, because there's the one thing I've always said it. One thing is always guaranteed, which is the governments will do too little at the beginning and then too much. And that creates a pendulum effect. And that's what happened in the real estate market. There was too little done up front. It really skyrocketed up, and now it's on its way down. But the question is have they done too much, and is it going to go too far?
Well, that's a question in every Western country. And what we have to really come back to around this is that, as much as they're slowing things down in the real estate world, we have to understand that real estate makes up a huge part of our GDP. Again, if he overreacts, if the Bank of Canada and TIF overreact, as we've just talked about, that could really, there is some definite risk there in terms of what can happen economically. He's got to really think about raising rates. And I think in December, we'll see a rate increase. I'm actually thinking, still it could be 0.25, 0.50. I'd be really surprised if he goes over that. But I do see a rate increase. The point is that as we slow that real estate market down, we got to watch those job numbers. Right now, they haven't ticked up. But again, there's always the lag. So we have to watch those job numbers. And this is where we go back to always when we're looking at, is there a recession really coming? Yes, there could be, but watch the job numbers, watch the immigration numbers, and that will start to tell you what the future is going to look like. Because as long as people are working, they make things work financially.
What if there's a negative 2% drop in interest rates next month, Patrick? Wouldn't that be amazing? I know. It's wishful thinking. It's a Christmas gift I'm hoping for.
That would fire things up. I think there's okay. So I don't know where we want to go with this now. Where do you want to go with this? Do we want to talk about the net export imports?
You can. Well, I'm out of sticky notes here. I was going to add a new sticky note because I want to talk about Think Tank. We just launched a new program. I want to talk about Think Tank. You want to talk about net imports, exports? Yeah, that's not. I don't have a sticky note for that though. What the hell do we do?
Well, I don't know what you should do, but I can't. What I'm saying is that they made a note. I think it was in this report as well, that there was an uptick in exports. So in other words, outgoing goods, which is good, but we have to really. They say it was. They talk about it as if it was this big number, but it just wasn't. And that's the one thing that I think that.
That shows up in the net trade, by the way, right? In these numbers, just so everybody knows.
Okay, there you go. Yeah, net trade is 3.3%. Net trade of 3.3% for the country of Canada. This is always my rant. Given the commodities that we have, given what we have the opportunities to do, drives me absolutely nuts, because our net trade should be far higher than that, given what we can produce, and it just doesn't. So I don't know what else I got to say about that. I just need to say it out loud because it really annoys me.
You're kind of like a kettle, eh? The pressure just builds. The pressure just builds, and you got to let it out, like little volcano, once in a while. So I get it. The one thing, JG, that we don't talk about in an immigration world, and that I think we should at least mention, so that people know we're aware of it and we see what's happening, and that is, as much as we talk about immigration and housing, and that's because what we are as investors, what we can't ignore is the pressure that the immigration is putting on our infrastructure. And primarily I'm talking about healthcare and hospitals, but at the end of the day, immigration coming in puts a lot of pressure and a lot of costs that we're taking on as a nation, because of 700 immigrants, 500, and then of course international students, puts a lot of pressure on our infrastructure, and we have to be aware of that. So as much as we talk as investors, good news, because we've got renters and all the rest of that, we also have to understand that there's a cost to that, and that cost could in fact show up as increased municipal taxes, as an example.